This is unit one. This is going to be trends. I'm not going to do a super long intro. We're going to get right into it. Basically, trends are market structure, and market structure is everything. It's going to be your bread and butter. So, really pay attention to this video and try to understand as much as you can. Watch it over a few times if you have to. There's going to be a lot that you need to know in this video. So, let's get right into it. The first thing we are going to talk about is how to identify trends. Now, there are two types of trends. There's an uptrend and there's a downtrend. An uptrend is pretty self-explanatory, it goes up, and a downtrend is the exact opposite, it goes down. Now, to identify these two different types of trends, we're going to look at the highs and the lows. So, as you can see, I marked the highs with H and the lows with L. So, right up here is a high, and right down here is a low. Now, this is what an uptrend looks like. And you can see that I wrote HH and HL. HH means higher high, and HL means higher low. So this high is higher than the previous, which makes it a higher high. And this low is higher than the previous low, which makes it a higher low. Pretty simple. Now, it's the same thing for a downtrend. It's just upside down. So we have our high right here and we have our low right here. We have our lower high because this high is lower than the previous one. And we have our lower low because this low is lower than the previous one. Now that we understand how to identify trends, I'm gonna explain why trends actually happen, and I'm gonna give you a deeper understanding of what you're really looking at. So if we look at this uptrend here, you can see that there's waves. There's a wave going up and there's a wave going down, and then another wave going up and another wave going down and another wave going up, so on and so forth. Now, these waves are indications of where buyers and sellers are in control. Now, when price is going up and making a high, that means that buyers are in control. So buyers are in control right here. Now, sellers are in control right here because price is going down. And then buyers are back in control, sellers are back in control, buyers are back in control. It's a cycle. A mistake that a lot of beginners make is when they see an uptrend or a downtrend on the chart, they misidentify a pullback. So this would be a pullback. So if it's an uptrend, price goes up, makes a pullback, and then continues to go back up. Now they misidentify this as a reversal, which is a really common mistake. And it's hard to identify and hard to understand what you're looking at when you're actually looking at the chart live. It's kind of easy right now because we just have static arrows, right? So it's easy to understand. But when you're looking at a live chart, it can be hard to identify and understand what you're looking at. So just keep in mind that you're going to need practice and you're going to need experience to be able to understand how everything works and how everything looks. Now, trends and market structure are super important for this strategy that I'm going to be teaching you. This strategy is nothing without market structure. Now, I'm going to give you a deeper understanding of how we use trends and market structure to actually take trades and make money. No matter what, as traders, we are predicting where price goes. The best you can do is make an accurate prediction of where price will go next. And the best way to do that is by seeing what happened previously, seeing what happened in the past. When we have an uptrend, you can see price is making a high, making a low, is making a higher high, right? Which means it will make a higher low. Now, when it makes a higher low, it will make a higher high. When it makes a higher high, it will make a higher low, so on and so forth. That's an uptrend. Now, the exact same thing can happen the other way. So price makes a low, makes a high, makes a lower low. When price makes a lower low, it will make a lower high. And then when it makes a lower high, it will make another lower low, so on and so forth. And you have a downtrend. Now, the way that we trade is through accurately predicting what move is coming next. Now, if price makes a high and it does this, what do you think is going to happen next? If we follow market structure and we follow the trend, we know that right here, price will make a higher high. So we can trade off of that. Now, another thing that I want to talk about is timeframes. And if you're not familiar with timeframes, they are they're up here on TradingView. And for example, the 1 hour time frame means that every candlestick is 1 hour of price movement. And if you go in the 4 hour time frame, then every candlestick is 4 hours of price movement, so on and so forth. The 4 hour time frame is going to be stronger than the 1 hour time frame. The daily time frame is going to be stronger than the 4 hour time frame. The higher time frame is always going to be more respected and stronger than the lower time frames. So when you're trading this strategy and when you're looking at market structure and you're looking for trends, you should be looking on the 1 hour, the 4 hour, or the daily time frame. Primarily, it's going to be the 1 hour, and then it's going to be the 4 hour, and then it's going to be the daily. Now, I wrote here 15-minute and 5-minute for entries. That's because when we're making entries, we can scale down to the 15-minute and the 5-minute time frame to get a closer look at what price is doing. But overall, when you're just looking at the market and analyzing, you need to be on the higher time frames, the 1 hour, the 4 hour, or the daily. Now, we're going to get into break of structure. Break structure. OS. Now, a break of structure is when price is on a trend, but then breaks the trend. People call it a shift of structure, a break of structure. Basically, it's breaking a trend and it's failing to create the next part of the trend. Now, if we're in an uptrend, we have a high, a low, a higher low, a higher high. What we need is a higher low. But as you can see here, price broke below the previous low, which makes it a lower low. So structure is broken. If price closed here, then we'd still be in an uptrend. But price closed below the previous low, which is a break of structure. And the same thing can be said for a downtrend. It would just look like this. Just look like that. You can see price made a low, a high, a lower low, a lower high, a lower low, and then failed to make a lower high and caused a break of structure. Now we're going to talk about consolidation. Consolidation. Now consolidation is basically when market does not have a trend and is stuck in a range like so. As you can see, price is stuck in this range and is not making higher highs or higher lows or lower lows. And it does not have structure. It does not have a trend. It doesn't have an uptrend or a downtrend. It's just stuck in a range. Now, this is price collecting liquidity to create a bigger push to either the upside or the downside. What you'll usually see happen is price stays in consolidation for a while, breaks out, pulls back, and continues. Now, this could happen the exact same way on the downside. So, like this, and like this. Trends is the most important thing that any beginner needs to learn. You need to be able to understand trends. You need to be able to understand how to identify trends. You never want to predict the market. You always want to react. So you want to react off of what you see and off of what the market is giving you. Try to completely understand every concept and every unit in every video of this course. If you have any questions, you can leave them in the comments down below, or you can send them to me on Discord. But yeah, just make sure you understand each topic and each unit. Watch it a few times, really understand it and master it, and then move on to the next video.